The spring budget 2025 is fast approaching, and with the UK economy under pressure, big changes could be on the way. When Chancellor Rachel Reeves delivers a spring statement on 26 March 2025, she'll face tough choices as economic growth struggles and the pressure to balance the books mounts. So what does this mean for taxpayers, businesses, and the public? More tax rises, spending cuts, or both? Let's break it down. What will the spring budget 2025 do for tax? Tax is always a hot topic, and this year's spring statement will be no exception. With frozen tax allowances locked in until 2028, an extension is possible. While a cut in the 45% additional rate threshold seems unlikely, it's not off the table. Meanwhile, employers face a national insurance increase from 13.8% to 15%. Alongside a lower payment threshold. On the employee side, speculation is growing that Reeves may reverse the 2% national insurance cut introduced by Jeremy Hunt in 2024, an unpopular move but one that could generate significant revenue. Additionally, the national living wage will rise to £12.21 per hour from 1st April 2025. Good news for workers, but another cost for businesses to absorb. Stamp duty, land tax. What could change? SDLT plays a huge role in the housing market, applying to property and land purchases above a certain threshold in England and Northern Ireland. Back in September 2022, the government raised these thresholds to boost the housing market. First-time buyers benefited from an increase from £300,000 to £425,000, while for other buyers the limit rose from £125,000 to £250,000. These changes led to significant tax savings, and in some cases, full exemptions for buyers. But here's the issue. These increased thresholds are set to revert to their pre-2022 levels in April 2025, unless the government extends them. Despite speculation about a possible U-turn, Reeves has given little indication that she'll keep the higher thresholds. With a £22 billion budget deficit to tackle, stamp duty land tax remains a crucial source of revenue. If the thresholds do go back to the previous levels, we could see a drop in housing demand and potentially a decline in house prices. ISAs and home buying. What's on the horizon? ISAs, particularly lifetime individual savings accounts, have helped many first-time buyers save for a home, offering a tax-free savings scheme where the government adds £1 for every £4 saved, up to £1,000 bonus each year. But here's the problem. The property price limit for using a lifetime ISA without penalties has been stuck at £450,000 since 2017, while house prices have soared. Buyers of properties over this limit face a hefty 6.25% withdrawal penalty on their savings. Campaigners have long pushed for an increase in this threshold to reflect today's property values, and there's hope that Reeves might finally address it. There's also been talk of reducing the lifetime ISA withdrawal penalty to 20%, allowing savers to keep their government bonus unless they withdraw funds for non-housing purposes. Meanwhile, cash ISAs, though indirectly linked to housing, have also been under review. Some proposals suggest slashing the ISA allowance from £20,000 to as low as £4,000 to encourage more investment in stocks and shares. Pensions and capital gains. Are changes coming? Pension tax relief has been a long-standing target for chancellors looking to raise funds, and Reeves could be the next to take action. A flat-rate pension tax relief has been debated for years, but with public finances under strain, this might be the year it finally happens. Capital gains tax is another area where changes could be on the horizon. Rates were already increased in the autumn budget, and there's growing speculation that they might rise again. There has even been talk of matching CGT rates with income tax rates, which would hit investors and business owners hard. Inheritance tax and wealth. What's next? Inheritance tax has already become less generous since business and agricultural property reliefs will be restricted from April 2026. But could the Chancellor go further? Speculation swirls that lifetime gifts and 7-year window for potentially exempt transfers could be the next in line for reform. And then, of course, there's the elephant in the room, a potential wealth tax. Reeves has ruled out a 2% wealth levy for the time being, but she hasn't dismissed it entirely. Given that public finances are under pressure, it is a possibility that is unlikely to go away. Rachel Reeves has a tough job ahead of her. With economic uncertainty and stretched public finances, the spring budget 2025 is set to be a major moment. Will she go for tax rises, spending cuts, or a combination of both? Whatever happens, one thing is certain. These decisions will have a big impact on taxpayers, businesses, and homeowners across the UK. As the Spring Statement 2025 draws near, homeowners and first-time buyers need to be on the lookout for policy changes. And we at UK Property Accountants will be closely following the Spring Statement and breaking down the key takeaways. Make sure you're subscribed to stay informed. Thank you for watching. I am Prerna and I will see you in the next update.